Right, good morning folks, good morning. A little bit of a music introduction for a change. It's not me singing, honestly. So, take a look at price action with a slightly different twist today. So the theme of today, as always, no surprise, is price action. So rather than bore you to tears with that particular concept again, we'll quickly recap just to remind people of the concept and the idea. But we're going to take a look at a different spin of it. And again, the main theme is buy support, sell resistance. That's essentially what we're trying to do as traders. So how can we identify support? How can we identify resistance? And integrate price action when we find a location that we're interested in. So slightly discretionary view on identifying a location. But we can identify, hopefully, good solid locations by looking at what price action has done historically. And when price gets back there, we can take action. We know, hopefully, which way the price is going when price gets to a location that we're interested in, as the price action sequence will ultimately tell us which way price is going when price is at an interesting level. So the basic premise of trading is buy support, sell resistance. Buy the break of resistance, sell the break of support. With this method, or with this logic, we're basically trimming the fat off everything. Basically trimming the fat off everything. We're not going to be looking at fibs, we're not going to be looking at trend lines, we're not going to be looking at indicators. We are literally looking at, as you can see on screen, a blank chart. So when price gets to a level of interest, we're going to look at how to identify those in a moment. We'll then assess what price is doing on lower time frames so that we can take appropriate action. So if price gets to a level we're interested in, if it goes up, down or sideways at that level, we can take appropriate action. So it might seem quite basic, this concept, to most people, but this is just essentially what we're trying to do. We're trying to buy support, sell resistance. So let's just recap on the price action sequence for a moment. When price is making higher swing highs, higher swing lows, it's going up. So if we can identify support, it's also going to be of interest knowing that when price is at support, when price is actually turning, or if it's actually turning at a particular level of interest. So when price is at support and it starts making higher highs, higher lows, it's going up. So what does that look like? Well, first off, let's just identify swing highs and swing lows. Swing low is a bar preceded and succeeded by higher bar lows, 3-bar combination. Just to clarify that definition a little bit further, depending on your data feed, you might actually have fractional pips. So seeing an equal low, for me, is usually unlikely. It still does happen, but it's becoming a more rare sight to see. So the full definition of a swing low and swing high is, well, a swing low is a bar preceded and succeeded by equal or higher bar lows. So I could have an equal low, for example, and a higher low. So it's an equal or higher low to create the swing high or the swing low. So 3-bar combination. So we've got swing highs and swing lows. So just marking off this portion of the chart here, say what we see on the chart. We've got low, high. So we just start the sequence here. So we've got a low and a high. This second one that I've got marked off is a higher low. Why is it higher low? Well, it's higher than the previous swing low. So this is a higher low. We've got a swing high here. It's higher than the previous swing high. So it's a higher swing high. So at this point of the chart, price is making higher swing highs, higher swing lows. So when price makes lower swing highs, lower swing lows, the first point in time that it does that, I tend to refer to as a bias change. Now, what we're going to do, rather than mark off all the swing highs and swing lows, we're just going to leapfrog them this time. This is typically what I do in my live training room. Leapfrog one swing high, swing low to the next swing low, or we can see now that the most recent swing low, let me just put a vertical line on the chart. Most recent swing low, again, assume that where the vertical line is, this is as if we were looking at it in real time. So the most recent swing low that would have appeared on the chart is lower than the previous swing low. So now say what we see. We've got higher low, higher high, lower swing low. So price is making lower swing highs, lower swing lows. Now, in this case, we've got a lower swing low first, and the lower high would typically still be developing in real time. So just be aware of that. This is what I tend to refer to as an alternative bias change. The only difference between an alternative bias change and essentially a regular bias change is the order of the sequence in which the swing highs and swing lows develop. In this case, the lower swing low is developed first, and the lower swing high is still developing. So when price goes below the lower swing low, again for a short, the lower swing low is the key. So say what we see: higher low, higher high, lower swing low. When price goes below the lower swing low, the direction bias is down, and I'll typically be looking for shorts from a direction point of view, and I can also use this exact same pattern on lower time frames as an entry trigger. So if price was at resistance, a level of interest for me, and price developed this bias change on a lower time frame, I can use this exact same pattern as an entry trigger. So, when does price go from short to long? Follow the sequence of events. Let's leapfrog again. So we've got the lower high. Zip it over to this part of the chart here. So we've got lower high. Leapfrogging again. We've got higher low. So we've got low, lower high, higher low, higher swing high. Low, lower high, higher low, higher swing high. This is what I tend to refer to as the regular bias change. And what we've got first in this case is a higher swing low first. So whereas previously we just looked at the lower swing low develop first, in this case the higher swing low has developed first. So in this case, if price goes above, guess what? The higher swing high, that's the key. Higher swing high. If price goes above that level, the direction bias on this time frame at that point in time will be up. Now in this case it doesn't happen and it voids. So when does this pattern void? The pattern voids when price makes a new low on the movement. So basically through the lowest point of the pattern. So we've seen a short direction bias and that trigger, and a long direction bias develop. So when does the long direction bias void? Well, it voids as price makes a new low on the move, and it also at the same time triggers the short direction bias. Everyone happy with the logic so far? So two variations of the same pattern, both of the first point in time when price makes lower highs, lower lows, or higher highs, higher lows. That is essentially the turning point for these direction biases. Now usually when price is trending, it's usually very easy to see when a trend is already established, but what we're looking at is the first point in time which it does that. So the first point in time is the first point in time that price makes lower highs, lower lows, or higher highs, higher lows. And when price is doing neither of those two things, so is everyone happy with the direction bias and the first point in time that it changes its direction bias and it triggers, and obviously when that voids? Is everyone happy with that logic so far? Does everyone understand that? It's pretty straightforward, I think. I think at first most people might find a little bit of difficulty. It's like anything new. When you're learning something new, it might take a little bit of a while to get used to it. Print some charts off. Sit back and relax and just mark off the swing highs and swing lows and note the phases and when the bias shifts from long to short or goes into range bound conditions. So that would be a nice little exercise that you could do in your own time to practice this skill. And it is a skill, it can be learned. So when does price go from long to short or short to long into range-bound market conditions? Again, let's just mark off the last two swing highs, two swing lows. And again, this is how I would do it in real time. Let's just scroll back actually and give you a real-time effect. So as the chart unfolds, so again, let's just assume we're looking at the chart in real time now. What I'd be doing would be I'd be leapfrogging the swing highs and swing lows as they present themselves. So what we can see at this point of the chart, it's still making higher swing highs, higher swing lows, going up. So by updating the price action sequence, it makes another higher high here. So again, higher highs, higher lows still. I've got a higher low. So price is still making higher highs, higher lows, and still trending up. There's the first lower high, and now price is making higher lows and lower highs within the previous swing high and the previous swing low. That's the first point in time that it's doing neither making new highs or new lows on the movement. So if it's not making new highs or new lows, price is range bound. Now, if you want to put a label on this, I'm not too concerned with what you call these things. If you want to put a label on these things, at this point of the chart, it's looking like an asymmetrical triangle or a symmetrical triangle. So at that point of the chart, it's looking like an asymmetrical triangle. I personally don't care what you call these things. I'm not interested in what the pattern's name. I stopped looking at the name of these patterns a long time ago. What I'm interested in is the extreme boundary of support and resistance. Now, why is that important to me? Because that is where price is contained. So until price goes above support or below support or above resistance, until it does that, the pattern can evolve into a differently named pattern. So I'm not too concerned with what it's called. So until it actually moves beyond support or resistance, price is range bound. End of story. It's not making new highs. It's not making new lows. Price is range bound. So does everyone understand when price goes from trending to ranging? Everyone happy with, again, the logic? The first point in time that price makes higher lows, lower highs within previous swing highs and lows, price is range bound. And again, usually when price is established as consolidating, like we're looking at the current portion of the chart right now, it's usually fairly easy to see where price is range bound, when it's established. But the hard part for traders in real time is when's the first point in time that you could say that the trend is changing from long to short, from short to long, or going into range bound conditions. These are the first points in time that you can say with a high degree of accuracy that it is doing high highs, high lows, lower highs, lower lows, or neither of those two things, and price is range bound. So these are the first point in times that you can say with clarity that it's going up, down, or sideways. So this is important, because if we're looking to trade the trend, counter trend, or ranging conditions, if we're looking at, say, a larger time frame, then we can use the exact same philosophy to identify which phase the market's in, and you can apply your trading method appropriately. If you're trading with a trend, you can adopt trending strategies. If you're looking for counter trend, you can potentially identify counter trend movements. If you're looking for ranging market conditions to apply a strategy, then obviously we can identify when the market is range bound to identify the best time, the conditions that would best suit your strategy based on the things that you're looking for. So these things are important. And again, you'll notice there's not one indicator in sight. Price is either going up, down, or sideways. Okay, so let's take this a stage further. So if everyone's happy with the logic with the price action sequence, let's think about how to integrate that with looking at price action. Identifying support and resistance. If we're trying to identify money flow, now as traders, as retail traders, we're not creating money flow. We don't create these movements. The big banks and institutions create the movements. So if we're trying to identify when money flow comes into the markets, when does money flow come into the market? Well, essentially when we see a big movement. It's nothing more complicated than that. Did everyone catch that? Do you want me to repeat it? It's a very simple idea. If we're trying to identify money flow and identify a location where a move started and hopefully join it, the easiest way to identify that is look for where the last big sharp movement developed. Where was the last lot of money flow that came into the market to create trading price action? Well, if money flow created this movement, then surely there's a whole load of buy orders around this level. So would this be a good location for support? Could that be identified as strong support and therefore an interesting level to trade off if it came back to that level? Yes, no, maybe? Would that be? Yeah, absolutely, yeah. So let's take a look at, again, some major movements down. So we've got a couple of pushes down here. Again, this philosophy can be used on any time frame. So I'm just going to highlight some pushes down. Again, These are quite sharp movements that I'm identifying. These are where the major movements started. So when price gets back to the start points, these would be useful levels to identify potential new trading opportunities. If that's where money flow came into the movement or the money flow came into the market, then it would be quite useful to know what's gone on in the past. Now, when we mark those levels off, how interesting do those levels look? Do they look quite interesting? So looking to buy support, sell resistance. So when price comes down back to these levels, so you've identified, or most recently you've identified this quite large upward movement here. This is where money flow came into the market. So if price comes back down to this level, there's a good chance we could see further money flow at support, buy support. So when price gets down to this level here, that's going to be an interesting level to keep an eye on. Similarly, when price gets up to these levels that we've marked historically, they could also be equally interesting levels to consider. So we've got a couple of levels there. We can see that when price got here, price consolidated, continued, got up to the next level, and started to sell off. We can see when price got up to this historical level here, consolidated for a short while, and to be fair, continued. Let's see where that, again, and just going back historically, we can see another large movement here. So when price gets back up to this, thinking about, rather than look with hindsight, so when price gets up to this level here, that could be a really interesting location to sell resistance. That's where this major movement down from 97.20 down to 9,500, that's where that major movement down ultimately develops. So when price gets up to that level, that's going to be an interesting level to keep an eye on. So let's think about this now. So we've identified with a very simple method of where money flow came into the market. So when price gets down to these levels, or when price gets back down to these levels, rather than think about a breakout, I mean, obviously we know how to deal with breakouts. I mean, we can identify this as a consolidation and trade breakout pullback. We've already dealt with that in the past with the breakout pullback strategy, so I'm not going to cover that now. We already know how to trade breakouts. So when price revisits these levels, just very simply identifying where the last major move was, identify this as, you know, a potential area that could be defended again. Again, you can see resistance areas, resistance levels that have been identified as trading opportunities. So let's just go back in time. Let's think about what happens down here. So price rallied up. We've got two possibilities here. So we've got this first one that created a down movement. Price got back down to support and then back up to resistance. So let's take a look at those. I'm going to drop down to a 3-minute chart now. So we've got the levels that we've identified. There's that last move up that we identified. Price got up to previous resistance level. And what can we do? Let's just focus in on the chart. First of all, you're looking for the bias to change. So now that price is at a level, it's at resistance. So now we'd be looking for the bias to change, quite clearly making higher highs, higher lows on its way up. So when price gets up to that interesting location that we've identified, I'm going to try and identify the first point in time that price starts pointing down, which is there. So the first point in time that price is pointing down is when price makes lower highs, lower lows. So we've got a high, higher low, lower high, lower low sequence. If price goes below the lower swing low, new direction bias to the downside, and you can anticipate potential movement down. Now in this case, obviously, we're looking at the first one we're looking at is one that would have stopped you out. For me, entry below the lower swing low, stop loss goes past the highest point of the pattern. Pattern is a bias change. So you're going to have a stop loss at around 20 with entry about 95. 30-point stop loss size with potential down to about the 95.30 level, and there's about 65, 70 points on offer by risking 30 points. Not a bad deal, not a bad deal at all. That obviously stops you out, as we can see, so it gets up to the next resistance level. So what am I going to do? I'm going to identify what price is doing at this level. It's making high, higher low. Tempted to bias change here, didn't trigger. Just where the cursor is. High, higher low, lower high, lower swing low. Price goes below the lower swing low, you're looking for shorts. Now, checking out the time on this, 2 o'clock in the morning, for me personally, possibly wouldn't have taken that trade on down to the time of day. Let's go up to a sensible time though, 6 o'clock in the UK morning. Is there an opportunity to join the movement? So first off, it gets up to resistance, interesting location. Again, appreciate that the time, for me personally, this wouldn't have been one that I would have been on, simply down to the time of day. So can I join the movements as price comes down to 6 o'clock time slots? So sensible time of day for me, UK trading hours. I'm looking for price to continue down. The majority of this movement is already done. Realistically, I would probably wait to assess price down at supports. So you've already missed the main movements. So again, chances are, again, realistically, from my own trading point of view, it wouldn't have been a trade that I would have taken on personally, simply down to the time of day. However, the philosophy still holds true: sell resistance, buy support. So you've missed one trading opportunity. Again, I would have personally missed this realistically, just simply down to my own trading hours, and that happens during the Asian session. So you've got an Asian session movement down. No problem. That might be a missed trade. Just have to let it go. So price is down to the next interesting level, back down to support. So what's it doing at this level? What's it doing at this location? Still making lower swing highs, lower swing lows. Mark off the sequence. So we've got lower high, lower low, higher swing high. If price goes above the higher swing high, I'll have a newly established direction bias to the long side, off support, with the opportunity to trade that back up to resistance, which we know now, this is where the last move started, was at 96.30. So if price goes above that level, takes a while to get there, eventually does, and starts to go off. So we can see that price gets up to this level. Let's just move this along. We know that that's a level of interest. What's going on at this level? Same process. Can you see? Sorry, yeah, it is a parrot. My apologies. Parrot in the background. So when price gets up to resistance, sorry, I'm just trying to quiet the parrot. When price gets up to resistance or down to support, we can start to assess price activity for whether it is going to turn at these levels. Does everyone understand the concept? Again, appreciate that it is slightly discretionary view with the initial identification of support and resistance levels. But when price gets there, it becomes really mechanical with the price action sequence. Let's just go back to the 15-minute chart. So again, thinking about the trading opportunities that are presenting themselves now, we've got another major push up there. So we know that this level, is going to be an area of interest. We know, looking back across the chart, that the 9700 and 9720 level is also going to be a level of interest. So if price gets up into the resistance zone, that's where the previous historical turning point develops. So when price gets up there, we can start thinking about looking for a bias change. So we've got a discretionary view, which we can mechanize as much as possible to identify locations, which is basically look for when the last major move happens. When or if price gets back there. Now, we've already dealt with breakouts in the past, so we can trade the breakouts of these consolidations as well to try and get the initial money flow movements, which is what I typically normally do with a breakout setup. But what if you miss the breakouts? When price gets back to these levels, we can start to assess what price is doing in a methodical and mechanical way by applying on the lower time frames the price action sequence. Price is at a level of interest, so I'll be looking for price to turn around at these levels. We can see some obviously workouts. Some of them you're not going to be able to join on because of the time of day, but others, when you do get there, do produce good movements. So the next level of interest, we've got resistance high between 9700s and 9720, support lows about the 9620 level. That was the last major move up. So if it gets up to resistance highs, we possibly trade that back down to support lows. When it gets down to support lows, we can possibly trade that back up to resistance highs again. So it's quite a discrete. Yeah, I appreciate resistance and support. We're not looking for a precise touch, so it is a discretionary view on where support and resistance is. But we can identify where the stronger support and the stronger resistance is by looking for the initial money flow movement. So it requires letting the move go and looking for price to come back and retest these levels. And again, if you look back on your chart, we can see that it retests these levels quite a lot. So you've got to let the initial breakout move go. We know how to deal with the breakout move, so you can join that initial movement with a breakout pullback setup. Again, please see the text article on the very, very first blog entry for that. But when price comes back down to these levels, we can certainly think about buying and selling support and resistance. Is there any questions so far on this before we start taking a look at yet another variation, which is probably for some people a little bit more specific? So trying to take that roughness around the edges. We've got the concept, we've got the idea. Let's take a look at trying to mechanize the initial support and resistance identification and take it a little bit of a step further and apply the same process. So any questions so far? Any questions? Which type? Forex Yardie. It depends on your objectives. Depends on your objectives. So if you're a scalper, you might want to use 15-minute, 3-minute charts. If you want to be a swing trader, take a look at a 4-hour chart with, say, a 15-minute entry. So what's your objective? Are you a scalper? Are you an intraday swing trader? Are you an overnight swing trader? Are you a position trader? What is your objective? So what you're looking to identify, let's just take this on the 4-hour chart then. So what you're looking to identify, major movements, money flow movements, one there. Why is this a major movement? Because it's basically a straight line movement. Straight line movements. Smaller one here, straight line movements. So when price gets back up to basically where the move started, we can start thinking about looking for trading opportunities. So when price gets into these zones, we can start looking for those trading opportunities. That's where major money flow came into these movements. So when price gets back to these levels, drop down to your lower time frames and look for the bias change. Price got back up to the level here, sold off. Major movements up here. Price gets back down to these levels, that's support. So you can start applying that price action sequence on the lower time frames. We don't really have to worry about the direction, whether you're looking for with the trend, counter trend, or range trading. What we're trying to identify with this discretionary method is basically to try and find where solid support and resistance are. And that can be identified by looking at the sharp movements that have already previously happened. Money flow, serious money flow coming into the market to create these movements. Sell, 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 all the way down, hit pause, then sell, sell, sell again. So if price is pausing here, that's where the move starts. So when price gets back to these levels, these are going to be levels of interest. Appreciate it is slightly discretionary. We'll look at a method for a moment We'll look at a method for the moment of identifying a more rigid way of identifying support and resistance, and we'll take a look at a different market as well. So we'll define the entry. Yeah, so the price action sequence. So let's just go back to the 15-minute chart. The price action sequence identifies the trading opportunities. So let's just drop down to a lower time frame. So say you're a scalper on the 15-minute chart, you've identified support and resistance levels, and you're looking for trading opportunities. Trading opportunity is the bias change: high, higher low, lower high, lower low. When price goes below the lower swing low, newly established direction bias to short side, and that will also be the trigger for a short. So an entry below the lower swing low on a lower time frame. We said earlier, the same pattern can be used for an entry. So below the lower swing low, direction bias is down, and also that can be used for the entry on the lower time frames. For me, the stop loss, I would always put past the event that caused me to get into the trade. The event that caused me to get in the trade is this bias change. So if price goes above the highest swing high there, so that's about 96.30. So as price goes above that higher swing high, I'll obviously be stopped out. That's where the stop loss would go. So let me just get a few questions. Let me just read back. So that's the entry defined. So the entry is the bias change and dictated by the pattern itself. So the size of your stop loss will vary because of the size of the pattern. It might be larger or smaller, varying between time frames and the actual setup developing itself. What's more important, high, low, or what's more important, highs or lows or consolidations of a range? Again, it comes down to your objectives, what you're trying to achieve. Are you a breakout trader looking for a consolidation to trade a breakout from? Or are you just looking to identify support and resistance levels? Now, with the methodology that we're looking at now, it's just literally the price action sequence for your entry method and trade management, and identify where the last major move was, so that when price gets back to these levels, that you can assess to see whether there is more money flow coming back into the zones, into those zones, so that you can join the money flow movement. So it's not really too concerned with identifying specifically named patterns. You're just trying to identify support and resistance to trade off. So it basically, as I said earlier, it trims all the fat off. Is it trending? Is it counter trend? Is it ranging? You're just simply looking for support and resistance. Good, solid support and resistance. And that's identified by the previous sharp movement out of a previous consolidation. So it does require letting the breakouts go. But we know how to trade breakouts already. We've already covered that in the past. So the breakout trade is an option to catch the initial money flow movement. And when price comes back to these levels, you can have a second bite of the cherry. Sorry, let me just read through the questions. The impulse move up constantly from buyers, sellers. Yeah, I mean, Olu, yeah, I mean, you can look for reversal bars if you want to stay with a single time frame and look for pin bar reversals. If that's what you want to do, you can mix and match it up as much as you want. But what you're looking for is confirmation of direction. So inside that reversal bar, I'd still drop down to lower time frames to see what price is doing. If price might develop a pin bar, but it could be a pullback that developed that pin or reversal bar. So inside that reversal bar, is price making lower highs, lower lows? Or is it just a pullback? Is it a set and forget strategy? It depends how you want to trade it. You might want to get the initial entry. You're going to have to be around to the initial entry and you basically set a target for the next level of support or the next level of resistance. What are the best days to trade the Asian session? If you find the answer to that, let me know. I'll pay you a lot of money. Can you set a stop order ahead of time? Can you set a stop order ahead of time? To be fair, if you're looking at the price action sequence for your entry, you need to wait for the high, higher low, lower high, lower low. So let's just go through the sequence. So let's just go through this. Let's just zoom in. So let's think about the entry on this. So price making high, higher low, lower high, lower low. As soon as that lower low is developed, my entry can go below the lower swing low. Stop loss past the event, which is the highest point of the pattern, and the pattern is the bias change. So my entry can go at that lower swing low. And if you're targeting the next level of support, then we know that that's quite a distance away, down at the 95 with 30, 95, 40 level. Now what we don't know is, first of all, whether it will get there, but we know when it does get there, we can start looking to close. To be fair, if you've got the shorts, you'd be looking to close the long, and you can manage the trade in that regard. So can you set an entry or a target ahead of time? You could set a target and use it as a set and forget strategy. Would I do it? No, not personally. You can adopt that approach if you so wished. You could get the initial entry, which does require some screen time, and set a target down at the next level of support or the next level of resistance. You could trade that like a set and forget strategy. So to summarize, look for levels, then buy, sell the breakout. No, we're not trading the breakout. We're not talking about breakouts. Breakouts have been covered in previous sessions. What we're talking about is identifying support and resistance. You're letting the initial breakout go. If you want to trade the breakouts, you can trade the breakouts, but they've been covered in previous sessions, trading the breakouts. What we're talking about is identifying these major moves up. That's the breakout move of the previous consolidation. And what we're saying is, you can trade the breakout, but what I'm talking about is identifying this location as a support and resistance level, that when price comes back down to this location, you can then start to think about, well, when it gets there, what's it doing? Is it going up, down, or sideways? So what, dropping down to the lower time frames, price is at this, basically back down to where this major move started. Drop down to your lower time frames and assess price action. Is it making lower highs, lower lows? If yes, it's still going down. If price starts making higher highs, higher lows, that's your trigger to start thinking about long trading opportunities. As price is making higher highs, higher lows off support. Not only is it off support, but it's off support where a previous major movement, money flow, has already presented itself. We know there are buyers at this level. That's what we're trying to identify. We know there are buyers. So if price comes back down to that level, there's a high probability that there will be buyers at this level. So it's not a breakout. Basically, you're waiting for that breakout to happen and price to come back down to where it started previously. It might happen the same day. It might happen the following day, as in this case. It might happen 2-3 days later. Trading breakouts, again, has been covered on a different session. And if you want to trade the initial breakout move, again, please see the breakout strategy in the breakout article. So in the last 5-10 minutes, I want to cover a more mechanical way of trying to identify support and resistance. And I also want to take a look at the Dow. I said last week we'd look at the Dow Jones. This is the mini Dow futures. So identify price action. So what I've got this chart prepared. Running out of a little bit of time, so I might have to just rush through this slightly if admin can let me know whether we're running out of time or not. So what I've done on the, we've got a 10-minute chart and an 89-tick chart. So what I've done is to try and mechanize identifying support and resistance. What I've got marked off is swing highs and swing lows. So rather than be quite vague about find the location, I'm looking at swing highs and swing lows, and I've just marked off some of the turning points on the chart. So we've got turning points on the chart. All these are 10-minute swing highs and swing lows. That's all they are. We know the definition for a swing high and a swing low. Bars preceded and succeeded by higher bar lows, lower bar highs. So I've got identified support and resistance. So again, with the same philosophy, buy support, sell the break of support. Sell resistance, buy the break of resistance. So again, you're looking to identify a location on the chart that you would like to participate in. Same philosophy. So when price gets up to these levels, let's just scroll through on a 10-minute chart. So when price gets up to or down to these levels, these are now going to be levels of interest. So we've managed to mechanize that same philosophy instead of being quite vague about it. So if you want to keep with the vague description, a more discretionary view, use the previous method that we've just looked at. Let's take a look at 10-minute swing highs and lows. This is a methodology for scalping the Dow. When price gets down to support or to resistance, I'm going to assess what price is doing. Is it breaking through the level, making higher highs, higher lows, or lower highs, lower lows? Or is it turning off these levels? So when price gets up to resistance highs, so we've got swing highs marked off here. So when price gets through these levels, again, just scrolling from the lower time frames now, when price gets up to these levels that I've got marked off on the right-hand chart, these are the same levels that I had marked off on the 60-minute chart, sorry, on the 10-minute chart. So when price gets to levels, assess what price is doing. Price got down to support. What's it doing? It was making lower highs, lower lows, then starts to make higher highs, higher lows. It starts to point upwards. When price gets to the next level of resistance, as dictated by the 10-minute swing high, it's making higher highs, higher lows. Therefore, it's still going up. Price gets to the next level of resistance. What's it doing? Making higher highs, higher lows. It's still going up. When price gets to the next level of resistance, what's it doing? It's making, high, higher low, higher high, higher low, higher high, lower swing low. Alternative bias change. Price got up to the next level of resistance and it started to turn. All these are 10-minute swing highs and lows. You could use 60-minute swing highs and lows, 240-minute swing high lows, daily swing highs, swing lows. In terms of looking at a scalping opportunity, I've just marked off 10-minute swing highs on the Dow. We're now into the active session. Time on the chart is about 10 to 4, and price starts to head off. So when price gets down to the next levels of support or resistance, you're then starting to think about looking for a continuation movement. So price gets down to the next level of support. What's it doing there? Price making low, lower high, higher low, higher high sequence. So from this point here, price is starting to go up. So we sold resistance, we bought support. In this case, scalper methodology is about 15 points on offer. Price is reversing off previous support. So when price gets back up to these levels again, right, we're going into the overnight session. I'm just going to fast forward. So we're back up to the regular session, so 2:30 on the chart. So the overnight trading activity is gone. We're back up to resistance highs again. So price is at the 10-minute resistance highs. What's price doing at these levels? High, higher low, lower high, higher low. Price is consolidating at resistance high. There's your breakout pullback. Price is making higher highs, higher lows as it moves through the 10-minute resistance. 10-minute resistance as dictated by a swing high on the 10-minute chart. What's price doing now? Well, hold on. We've got a breakout move, and what happens is it flips over. We've got the high, higher low, lower high, lower low sequence. So price at this point of the chart here, although it did break out, was making higher highs, higher lows, it's now reacted off resistance, making lower highs, lower lows. Price is now pointing down at resistance. Price doesn't get down to the next level of support. A little bit of a knee-jerk reaction on some news. Price gets down to the next level of support. Consolidation, quite clear consolidation. Price gets down to the next level of support. Is it there yet? Not quite, not quite. Next level of support, what's it doing? It's making lower highs, lower lows. Next level of support, what's it doing? Lower swing highs, lower swing lows. So I'm looking for the next level of support. We've already marked off these 10-minute swing highs and 10-minute swing highs and lows. We've already marked these off. Remember, these are the swing highs and lows we marked off. Price gets down to the next level of support. What's it doing? Price is still making lower highs, lower lows. So instead of being quite vague and using that discretionary view that we looked at with the Japanese yen, we've taken a slightly more structured approach by looking for 10-minute swing highs, 10-minute swing lows. Appreciate we are looking at the mini Dow Jones futures. So all I've done is identified swing highs and swing lows, 10-minute swing highs and swing lows. Again, you could take a slightly larger standpoint and use 30, 60, 2-hour, 4-hour, daily, depending on your own personal objectives for trading. This is obviously in the context of the scalping strategy, 10-minute swing highs and lows, and you've identified mechanical assessment areas. That's where price turned from previously. There's a good chance it could turn from these points again. So when price gets down to the next level of support, so 83.80, so we've got the 83.80. So this is the level we're at here. So we've identified this as it's a swing high and a swing low level, this 83.80. What's it doing at this level? It's making lower highs, lower lows. Still going down. Gets down to the next level of support. Oops. What's it doing? Price is starting to chop around a little bit. Coming back up to that resistance level at 83.80. So when price goes through that level, break through, pull back, oh, and then it turns over. So it does break through. You could be looking for a long, very briefly long, higher high, higher low, higher high as it moves through resistance, breaks through resistance. Previous support now acting as resistance. Now what's happened? Higher low, higher high, lower low, alternative bias change. So we've got you long very briefly. Price action telling it to go back short, straight back down to the next level of support. What's price doing at these levels? Is it making lower highs, higher lows, or higher highs? Sorry, is it making higher highs, higher lows, or lower highs, lower lows? Is it going down at these levels, up at these levels, or is it turning at these levels? Price action integrated with a discretionary view of support and resistance and a mechanical view of support and resistance. Can a 10-minute strategy be used in foreign exchange? Of course you can. Price action, it's pure price action. There's no indicators. You can use this on any time frame, any markets, anywhere you want. To identify how you should trade, what's your objective? So just to finish off then, identify your objective. Are you a scalper, intraday trader, intraday swing trader, overnight trader? Are you looking for long-term, short, medium, short, or long-term swing trades? That will dictate the types of trades you're looking for, whether you use higher time frames or lower time frames. When price gets to a level of interest, assess what's going on. Is it going up, down, or sideways at a level of interest? You can use the discretionary view and wait for the money flow to show itself as being good support or strong support or resistance, or 10-minute swing highs that we've just looked at on the Dow. You can use 60-minute swing highs and lows on currencies. Personally, I would use 60-minute swing highs and lows on currencies. Drop down to lower time frames and assess what's going on. Is it going up at those levels? Is it going down at those levels? Any final questions before we finish it off? So basically, this is just support and resistance trading with a mechanical entry method using the price action sequence. Identify a location that you're interested in. When price gets there, assess what's going on. Is it going up, down, or sideways? As traders, we're looking to buy support, sell resistance. Buy the break of resistance, sell the break of support. This pretty much is as simple as it could get. And this methodology, slightly discretionary, the first way that we looked at, slightly more mechanical, but the way we looked at on the Dow Jones futures, using the swing highs and swing lows as your interesting levels, and assess what price is doing. Yeah, you can use this on any time frame. I've traded this method on futures. I've traded this method on currencies, although I prefer to use other methods on currencies personally. It's just pure price action interpretation. Find a location that is interesting to you, a level of interest. When price gets there, what's price doing? Drop down to the lower time frames. Is it going up or down or sideways at that level? I think we're actually out of time. There's one last question. Can you run down different time frames used by different traders? If you want to contact me, if you want to send me an email, I'll go through that with you. Just contact me through the website or contact me through the blog and I'll go through that. Again, just to reiterate, this is pure price action. It's the same on a 1-minute chart. It's the same on a 5-minute chart, 15, 20, 30. You could use a 33-minute chart. You could use 57, 133 minutes. It doesn't matter. This is what price is doing. These are market facts. It is either going up, down, or sideways. This is pure price action. and the facts cannot be denied on the chart or time frame that you're looking at. Yeah, I like to look at 89 ticks. It's not time dependent. It's about the equivalent of a 2 or a 3 minute chart. Gregory, yeah, so basically you could look for high time frames. So for example, 4 hour, 10 minute chart, or 4 hour and a 15 minute chart on currencies. Yeah, that'd be quite suitable. The mix of time frames, you want at least a division of 4 to separate the time frames. So say 60 minutes and a 10 minute chart, 4 hour, you could get away with a 60 or a 15 minute chart. Those types of things. So if you want some more specific details, please feel free to contact me. Please follow the contact link, or contact me on the blog. Pitfalls of this method. Pitfalls with every method. Pitfalls are you'll lose money. When you're wrong, you'll be wrong small. When you're right, you'll be right big. Okay, folks, I think we're out of time now. Thank you very much for your time. As always, thank you for attending. Thank you for listening. More importantly, thank you for interacting. It does make the session better when people do get involved and ask me questions and try and pick my brains. I did run out of time, so if you want to send me questions via email or via the blog, please feel free to.